This is Cece. Welcome to The Orbit. It is Tuesday, December 12th. It's a CPI morning. The CPI report is out. It came in about in line with expectations, and the market is doing nothing. We're looking at the SPY right now, basically unchanged. The same is true for the Qs, where we had expectations, or at least the options market had expectations for a little bit more volatility than the prior few weeks and the upcoming weeks, obviously going into the holidays. CPI was part of that, and then the FOMC meeting starts today, and we get to hear the announcement tomorrow and a press conference from Powell. The CPI, where that fits all into that, is probably that it takes a little bit of the volatility potentially off of the FOMC meeting, because had there been a shock one way or the other on CPI, it would have led into a little bit more uncertainty it wouldn't have changed the FOMC's release as much as it might have changed the tone in Powell's press conference. We're probably likely to hear what we've been hearing from him recently in other speeches, which is essentially talking down the market on the chance for rate cuts sooner rather than later. And again, as we've been saying on the orbit, rate cuts aren't necessarily something that would be received bullishly with the market. It's impossible to say beforehand, but the conditions of which those rate cuts came in might be a disinflationary environment, or an environment that it was pretty obvious that the economy was slowing down and the Fed would be lowering rates. So again, be careful what you wish for. For the rest of the week, we are looking at about a 1.2% move in the SPY and about 1.5% move in the Qs. That includes that FOMC meeting. If we were looking at selling the move for the rest of the week, we would be looking at strikes of about 456 and 468 as the short strikes, with break evens just a little bit beyond that. Looking out into year end, let's just go out and let's see what the we're talking about a 2% expected move into year end. You can see this sort of creep we've done towards the end of this rally that began in the fall, and it looks like it's going to go all the way into year end. And that slow creep is turned into an expectations of about a 2% move in the options market. So once again, those looking to hedge, those looking to not sell stocks into year end, those looking for breakout potential plays into 2024, or even those really geared up for a pullback, especially to start a new year, which happens sometimes in 2024. If you are bearish for 2024, options are extremely inexpensive. And that is true even going out in time. So we're looking at February, we've got about 12 vol. Let's go out even farther, even out into April, 14 vol. Remember, this is all quite low IV. So considering what we've just seen on these moves, higher and lower and back higher, as you can see from the visualization out into the future, options are not pricing those sorts of moves for months, and which means that those looking to position directionally in the market, and in a lot of individual stocks at this point, can basically look out in time and not be punished too much via time value.